Welcome back to the Deep Dive. Today, we're ripping open a really comprehensive look at the crypto space. The Messari Crypto Theses 2025 report.
Yeah, this thing is pretty detailed. It covers Messari's look back at 2024 and, what they see coming in 2025. Everything from macro trends to specific crypto sectors.
Exactly. And this deep dive, think of it as your shortcut. We're basically pulling out the most important nuggets, the key takeaways from this massive report.
Right, so you can get up to speed on the big shifts, the predictions, without reading hundreds of pages. That's the mission here, getting you plugged into the landscape for 2025 based on their analysis.
And honestly, there's some genuinely surprising stuff in here, like angles you might not expect.
Oh yeah, like what?
Well, things like actual physical real-world infrastructure being built using crypto.
Yeah.
The kind of weird success of AI agents, which is a whole thing.
Ah, okay.
And, the shifting power dynamics between the big blockchains. It's not static.
Okay, got it. So where do we start? How does the report frame 2024?
They basically call it a year of transformation and resilience. Crypto kind of grew up a bit, built more trust after the previous cycles,
Maturing, makes sense.
and they highlight two massive milestones from 2024 that really cemented that. First, those long-awaited spot ETFs, Bitcoin, then ETH.
Right, that felt inevitable, but actually seeing them launch, that was big. Messari says that's when institutions really truly showed up, not just talking about it.
For real, as they put it. And the second thing, policy, especially in the U.S.
Yeah. The regulatory vibe seemed to shift a bit, maybe got a little friendlier, which definitely helped lower the perceived risk for the bigger players looking at crypto.
So that's a crypto-specific setup.
Hmm.
But, like always, you can't ignore the macro picture, right? The report talks about traditional markets in 2024 climbing a wall of worry.
Yeah, that sounds about right. There were those fears early on about inflation coming back, then worries shifted to the job market, maybe weakening.
Yeah, I mentioned the SAM rule discussion.
Right, the SAM rule, which can signal a recession based on unemployment jumps. But Messari suggests that this time, maybe the rising unemployment figure was kind of offset or voided, as they put it, by more people joining the workforce, particularly driven by immigration, apparently.
Interesting nuance. And amidst all that worry, the Fed actually did cut rates. 50 basis points in September, another 25 in November.
Exactly. And that's where it gets interesting for crypto, right? You had easing monetary policy, plus the U.S. consumer turned out to be surprisingly strong. The whole economy held up better than expected.
Yeah, U.S. growth was solid. China started stimulating.
So all that together created a pretty favorable win for risk assets. Like the S&P 500 was up, around 27% year-to-date when they wrote the report in December.
Wow. And they mentioned other macro stuff, too.
Yeah, quick hits like AI productivity gains starting to get priced in, central banks, especially China, India, Turkey buying up gold. Energy costs stayed kind of muted despite everything. And China easing its money supply.
So the takeaway is this macro backdrop, easing rates, strong risk assets. That usually helps crypto.
Absolutely. It just shows how interconnected it all is. These big global shifts directly feed into the digital asset world.
Okay, back to the institutions then. You said Messari was emphatic. They're here.
Yep. No more hedging. They're here. And they're actively involved, not just watching.
What's pulling them in, according to the report?
It's the core blockchain advantages, really. Things like instant real-time settlement, which is huge for TradFi, liquidity outside of normal market hours, and fractional ownership possibilities, stuff that's hard or impossible otherwise.
They gave that specific example, right? Fidelity and Citi.
Yeah, that proof of concept digital money market fund, the MMF, with an FX swap solution built in. The idea was to let corporate treasurers easily invest non-dollar cash into US dollar MMFs using these crypto rails. More efficient.
So real-world plumbing being tested by the big guys. Okay, let's switch gears to policy again. The U.S. outlook. You mentioned it seemed friendlier, but the report was balanced.
Very balanced, yeah. Looking ahead, especially with a potential Trump administration, they suggest, ambitious crypto reforms could happen.
But there's always a but.
But yeah, big risks too. The report warns things could reverse quickly if crypto starts looking like a threat to the US dollar's dominance, or if, say, the BRICS financial system really takes off during some kind of crisis.
That tension is always there.
Which leads to their make or break idea for policy in 2025. They argue any big crypto laws probably need to get passed early on.
Why early?
Because political goodwill might fade, or Congress could change after the 2026 midterms, making it harder later. Strike while the iron's hot, basically.
Makes sense. What about CBDCs? Central bank digital currencies.
The report doesn't really see a retail CBDC happening under Trump, But the research, the R&D on wholesale CBDCs, that's likely to continue at the Fed, especially for things like cross-border payments.
Okay, and they mentioned DeFi playing a role, like Uniswap.
Yeah, interestingly, they suggested that the big US DeFi players like Uniswap could end up influencing how future DeFi regulations get shaped. It just highlights this balancing act, the potential for good rules versus the real risks from politics or clashing with the old guard financial system.
Okay, let's talk money. Fundraising in 2024. What was the vibe?
Interesting picture, actually. The report says more deals got done compared to 2023. Like, the number of deals was up about 16.4%.
Okay, more activity.
But the total amount of money raised was actually down, roughly 20% lower, around $15.9 billion.
Huh. Where the disconnect?
They think it's partly because 2023 had a couple of just massive outlier funding rounds that kind of skewed the numbers upwards that year. So 2024 was maybe more broad-based, less about those mega deals.
Gotcha. Though they did mention one huge raise in 2024.
Oh, yeah, Monad Labs. They pulled in $225 million. That was a big one.
And where is VC money generally going?
Still seems focused on the core stuff, according to the report. Infrastructure, layer ones, the foundational building blocks.
All right, let's dive into the sectors. Bitcoin first. Had a pretty wild 2024, based on the report.
Oh, yeah. Headline grabber for sure. Consecutive all-time highs.
What drove those?
Well, the report links the first big surge in March straight back to the ETF approvals and launch in January. Makes sense.
And the second one, later in the year.
That came after the U.S. election, when Trump's win was called around November 6th. Bitcoin rallied again, apparently pushed past $100 K in early December when they were writing this.
Wow. And its dominance, market share.
Increased quite a bit, reached around 55% of the total crypto market cap.
So looking ahead for Bitcoin, more ETF inflows.
That's the expectation, and Messari suggests something interesting. Institutions might become the main drivers of Bitcoin's price now, which could mean, maybe, smoother price action, less of the crazy volatility driven by retail or leverage, potentially.
Interesting shift. And the store of value narrative.
Got a big boost. They noted Bitcoin actually flipped silver in November to become the 8th most valuable asset in the world. That's a milestone.
But what about using Bitcoin, like for stuff other than just holding?
Yeah, that's the flip side. The report says things like programmability, staking on Bitcoin. It's all still very early days, nascent.
So where was the action happening in 2024?
Mostly on the faster chains, right? Like Solana, Base. That's where users, and frankly, the speculative energy went, which is a challenge for people trying to build more utility on Bitcoin.
But the potential is still there if they figure it out.
Huge potential upside, yeah. Massive addressable market if Bitcoin utility catches on. But it wasn't the story of 2024.
Okay, let's talk Ethereum then, and the competition. Report says ETH actually underperformed Bitcoin and Solana in 2024.
It did, and it faced some headwinds, like that ultrasound money idea, where ETH supply is supposed to shrink.
Yeah.
Well, network activity was kind of low, so not enough ETH got burned. It actually saw some supply inflation, which challenges that narrative. Plus, the initial uptake for the ETH ETFs wasn't as explosive as Bitcoin's.
And they mentioned this fragmentation problem with all the layer twos.
Right. That's a big theme. So many L2s building on top of Ethereum, it kind of splits up liquidity and users. So there's this big push now for chain abstraction.
What's that exactly?
Basically trying to make it so users don't even realize they're hopping between different L2s or even different chains. Make it all feel like one smooth experience, hide the messy plumbing underneath. They mentioned projects like Particle Network, Polygon's Ag Layer working on this.
Okay. And you said activity, like speculation, was moving away from Ethereum.
Yeah, the report definitely highlights that shift towards chains like Solana.
How do they measure that?
Well, things like token launches. Apparently 8 times more tokens launched on Solana using tools like Pump Fund compared to Ethereum. And Solana was regularly doing more trading volume on its decentralized exchanges, its DEXs, than Ethereum was. That tells you where the crypto-native crowd was playing.
So looking ahead, more competition for Ethereum's virtual machine.
Seems likely. The report expects alternative VMs, like Solana's and the Move VM, to keep gaining ground because they're often seen as faster or having different security trade-offs.
And for the L2s themselves.
Early signs point towards really high-speed L2s, like Mega-ETH, maybe attracting the super speculative apps, while others, like Base, are really doubling down on just making the user experience, the UX, much better.
What about Cosmos? The report touched on that too.
Yeah, Cosmos had a tougher time, according to Masori, struggled with like what the ATOM token is actually for, how it captures value, and governance issues that kind of led to stagnation.
Not all bad news, though.
No, there were bright spots in the ecosystem. Like Noble, which is built using Cosmos tech, issued over $1.5 billion worth of USDC, so innovation happened. But the core ATOM outlook, still a bit uncertain. They're hoping the Interchain Foundation buying Skip Protocol, now called Interchain Inc., helps coordinate things better.
Okay. And Avalanche. Quick outlook there.
Pretty positive, actually. Big hopes pinned on the Avalanche 9000 upgrade planned for late 2024. Supposed to bring big performance gains, better cross-chain communication. Plus, Avalanche has been good at business development, BDD, pulling in institutional gaming projects.
Right. Okay. Now, you mentioned DePIN earlier, decentralized physical infrastructure networks. It sounds like the report was really high in this sector.
Oh, yeah. This section was detailed. They called 2024 a breakout year for DePIN. Market cap surged like 132% to over $40 billion.
Wow. That's huge. Why the sudden boom? What's the magic there?
The core idea that seems to be working is using crypto incentives to get lots of individuals or businesses to contribute hardware like storage, bandwidth, sensors, you name it. It radically speeds up building physical infrastructure compared to traditional top-down methods. Blockchain just acts as the coordination and payment layer.
And they think this could even involve governments soon.
Yeah, they explicitly predict a major government partnership in 2025. They point to the U.S. Department of Agriculture already working with a DAPIN project called GeoNet in 2024 for precision agriculture. Because DePIN builds real stuff, it seems like a logical place for governments, especially maybe a pro-crypto one, to engage.
Fascinating. What kinds of DePIN are we talking about?
Several types. Decentralized compute is a big one. Networks like Akash, IO.net, trying to offer cheaper GPU power for AI training and inference.
Can they compete with the big cloud providers for serious AI?
That's the challenge. The report notes that training the really cutting-edge frontier AI models is incredibly expensive, maybe still too much for current DePIN networks, but for other tasks, maybe. And teams like Jensen, Prime Intellect are working on distributing the training process itself.
Okay, what else? Wireless?
Yep. Helium made a strategic pivot, focusing on its HNT token and Helium Mobile. Dawn started rolling out, but the really interesting tactic highlighted was using browser extensions.
Browser extensions. How does that work?
Projects like Grass and Bless Network basically reward users for letting the extension use their idle internet bandwidth in the background. That bandwidth then gets sold, often to AI companies needing data for training. It's a clever way to onboard millions of users almost passively. Report expects more of this in 2025.
That is clever. Turning browsing into infrastructure. What about high-value data?
Right, that's where things like RTK networks come in, real-time kinematic. They provide hyper-accurate location data, like down to the centimeter.
What's that used for?
Crucial for precision farming, drone deliveries, self-driving cars, AR, anything needing exact positioning. Masari highlights GeoNet and Onakoi here.
And GeoNet is a big success story.
Apparently so. Scaled incredibly fast using the DePIN model, like 11,000 plus ground stations in under 2 years, compared to decades for traditional players to build fewer. And it's generating real revenue, over $1.6 million annualized, with a token buy and burn mechanism tied to usage.
Wow. Okay, what else? Mapping.
Yeah, they contrast Hive Mapper, which needs its own special dash cam, with MetaGex, which uses software in your smartphone camera. Different approaches to collecting map data.
Mobility, cars.
Growing demand for vehicle data, especially with more autonomous cars from Waymo, Tesla on the roads. Masari sees potential for city governments to partner with these DePINs for smart city planning.
And these hybrid models.
Yeah.
Like Protea.
Yeah, that's interesting. Protea runs a generative AI image service, like a normal web business, but it uses DePIN compute networks on the back end for cost savings, so it's mixing Web 2 and Web 3, generating good revenue too, apparently 7 figures.
Smart. And where are these DePIN projects building which blockchains?
They're picky, choosing based on good UX, good tools for developers, DevX, low fees, and whether the chain has a consumer focus. The report suggests Base is actually doing well attracting DePINs within the Ethereum ecosystem, maybe even better than Solana in some cases. Projects like Daylight, Plural Energy, Dymo choosing Base.
So DePIN is really about bridging crypto to the physical world. Sounds like Masari thinks this is a huge trend to watch.
Absolutely. They expect it to get a lot more attention from mainstream industry, academics, media in 2025. It's tangible.
Let's shift to consumer apps. What's the focus there?
User experience UX, that's priority number 1, according to the report. making crypto apps less clunky, more intuitive.
Any standout examples?
Zora gets a big shout out. Their mobile app apparently made minting and trading NFTs feel more like using Instagram or something. Super simple. And it worked. They got like 90% of all unique minters using their platform.
That's dominant. They also developed a new token standard.
Yeah, ERC20s with Uniswap. The cool thing is it lets NFTs trade just like regular ERC20 tokens after the initial mint. Better for artists, easier for collectors to trade later.
What about gaming? Any big trends?
Oh, yeah. Those tap-to-earn games on Telegram, like Catizen, Hamster Combat, they just exploded. Millions of daily users, tens of millions in revenue, showed Telegram is a monster distribution channel for simple flipto games.
So even established games are using that model.
Yeah, Pixels use mini-games to attract players, and on the higher end, the AAA game Off the Grid managed to pull in mainstream gamers using Twitch streamers and influencer marketing. Big viewership numbers there.
Interesting. They also talked about play to airdrop, P2A.
Right. Games like Pirate Nation used that model. Give players tasks, reward them with points that might lead to an airdrop later. It worked well for getting daily active users. Pirate Nation got nearly 80,000 DAUs that way. But the challenge is always filtering out the bots, just farming the rewards.
Always the bots. What about the NFT market itself, profile pictures and all that?
Well, the report basically says interest cooled off after the 2022 mania, which is kind of expected in this phase of the market cycle. NFT booms often follow big gains in regular tokens, that wealth effect.
So what now for NFTs?
The expectation is a shift. Instead of everything going up, you'll see specific NFTs outperform based on real utility or strong branding, not just speculation. They also mentioned the ordinals market on Bitcoin gaining steam, with Magic Eden leading there.
And the PFP projects, the apes and pucks of the world.
The ones that survived are focusing hard now on building actual brands, expanding their IP beyond just crypto circles. Many others just faded away after 2022.
So consumer apps overall, sounds like a period of building and maturing.
Yeah, the report sees the innovation happening now, even in a calmer market, as a sign of maturity. You can start valuing things based on fundamentals, not just hype, and see who the real leaders are.
Okay, let's talk RWA's real-world assets and stablecoins. Bridging TradFi. Tokenized treasuries were big.
Especially when interest rates were high, yeah. Great way to bring safe, familiar yield on-chain. But the report notes, now that rates are coming down, they face headwinds. The yield advantage isn't as strong compared to other crypto yields.
But there are still opportunities for RWAs.
Definitely. The report points to huge piles of idle cash sitting on chain, like $800 million in DAO treasuries, maybe $1–2 billion in VC funds. RWAs could target that.
And potentially replacing stablecoins as collateral on exchanges.
That's another angle. If exchanges start accepting yield-bearing RWAs as collateral, Bybit is an example they cite, then potentially billions currently held in stablecoins on exchanges could move into RWAs, maybe like $2.9 billion worth.
But there's a challenge, exporting yield.
Yeah, how do you take those on-chain yields and offer them to people off-chain without watering down the returns for everyone already in the pool? That's tricky.
Got it. Now, stablecoins themselves, still dominated by the US dollar.
Absolutely. Report reiterates the dollar's king, and stablecoins are just a super efficient way to use dollars on crypto rails.
But there's innovation within stablecoins, right? Athena's USDD.
Right. That grew incredibly fast, hit $3 billion in supply. It uses that cash and carry strategy.
Explain that again simply.
Okay, so you basically buy something like staked ETH, which earns yield, and at the same time you short ETH futures. The goal is to be market neutral, not betting on the price going up or down, but capturing yield from the staking and the funding rates paid on the futures short. It's complex, but it worked, and now others like Elixir are copying it.
And Coinbase is doing something with USDC yield.
Yeah, offering 4.7% yield on USDC just sitting in the Coinbase wallet, specifically on the Base network. The report sees this as pure user acquisition, trying to get people to use Coinbase Wallet like a savings account and onboard them onto Base.
Smart play. And this PayFi network idea, Huma Finance and ARF.
Yeah, that's about using stablecoins for specific business finance needs, like trade finance, funding to pin projects, cross-border payments. They project $10 billion in transactions next year, letting businesses borrow from these stablecoin pools for short-term cash.
Lots happening. And yield strategies overall evolved. Points farming.
Oh yeah, points were huge in 2024. Eigenlayer, Athena, Hyperliquid, all these protocols gave out non-tradable points for using their platform with the promise of a token airdrop later based on points.
The way to get users early.
Definitely good for bootstrapping and building hype. But the report also points out the downsides, like secondary markets popping up for points, whales market, for example. And the whole model maybe got a bit disconnected from real usage, becoming just about farming coins. Fragile, potentially.
Right. Okay, final big sector dive. AI and crypto. This feels very forward-looking.
It is. Lots of pieces here. Again, decentralized compute comes up. Akash, IO.net, Jensen, Prime Intellect, trying to provide cheaper GPU access for AI models. But again, the caveat about the sheer cost of training the biggest models still being a hurdle for decentralized approaches right now.
And AI coordination, like Bitensor.
Right. Bitensor uses crypto incentives to get people to collaborate on building AI models in a decentralized way across different specialized subnets.
Okay, now, the report mentioned something about AI agent KOLs and meme coins. This sounds weird.
It is weird. This is where it gets really interesting and maybe a bit bizarre. The report dives into the rise of AI agents acting like influencers, key opinion leaders, and meme coins attached to them.
Like, give me an example.
The main one they cite is Goatius Maximus, or GOT. It was tied to an AI agent called the Terminal of Truths, or TOT. And this thing, this meme coin linked to an AI agent, apparently hit over a $1 billion market cap, just fueled by AI hype, memes, crypto coordination, wild stuff.
$1 billion for an AI agent's meme coin.
Yeah.
Wow. Are there others?
Yeah, they mentioned Zuri making art, Luna using humans for tasks, AXBT reporting crypto news, even a supposed venture fund called A16s run by AI agents. It's very experimental.
And platforms are popping up to build these agents.
Exactly. Virtuals Protocol, tooling from Eliza 16s. Masari makes an interesting distinction. They call these agent coins dynamic. Their value is linked to the agent actually doing stuff and getting attention, versus static meme coins like Doge. They think this dynamic model might gain traction, even though building working agents is obviously harder.
So crypto is like the sandbox for this AI agent stuff.
Pretty much. It provides the tools, incentives, community building, attention markets to experiment rapidly with these ideas in a way that's harder in the big centralized AI labs.
Interesting. Crypto as the R&D lab for weird AI. Did they touch on the open source versus closed source AI debate?
Briefly, yeah. Mention crypto's community building strengths could play a role in that conversation, supporting more open development.
Okay, almost there. The report finished with awards. Masari Awards 2024.
Yeah, first time they did it. Nice way to highlight some key players from the year.
Who won Rookie of the Year?
Pump.fun took that for its huge impact on token creation, especially on Solana. Hyperliquid was runner-up.
Most Active Fund.
Animoca Brands won that. They did 107 deals, super active, and invested broadly, not just gaming. OKX Ventures was runner-up.
And Best Investment Friend Blog.
That went to Syncrasy Capital. Masari praised their writing for being contrarian, forward-thinking, and really shaping conversations, like pushing the focus towards applications and helping define the Solana story.
Okay, cool. So let's wrap this up. If we boil down this whole deep dive into the Masari 2025 theses, what are the big takeaways?
I think first is just maturity and legitimacy. 2024 felt like a year crypto got more serious, right? The ETFs, the policy shifts, real institutional interest, it's less fringe.
Yeah, definitely feels that way. And second,
Just tons of innovation across the board. It's not just one thing. You've got Dipin actually building physical infrastructure, consumer apps getting way better, easier to use, and then these really out there experiments like AI agents taking off.
so legitimacy on one hand, but still rapid, sometimes weird innovation on the other.
Exactly. And underlying all that is this constant push to improve the core infrastructure, make everything work better, smoother for the user, whether that's an institution, a developer, or just a regular person.
But it's not all smooth sailing. The report acknowledges challenges, right?
Oh, absolutely. Policy is still uncertain, risky. The competition between blockchains is fierce. And it's still crypto, you know?
Yeah.
Markets are volatile, things change fast. It's complex, but definitely exciting.
For sure. Okay, final thought for our listeners, something to chew on based on the report. Masardi really emphasizes this point,
Which point?
that the real winners in the next phase, especially in infrastructure, won't just be the ones with the fanciest tech. It'll be the ones who make that tech invisible, who create truly seamless user experiences.
Right. Translating tech progress into something people can actually use easily. That's the key. So, thinking about everything we just covered, all the L2s trying to abstract complexity, the dicking projects making real-world interactions simple, the consumer apps focused on onboarding, where do you think the biggest breakthroughs in user experience are going to come from next? Which area will crack that code first?